non-farm bonus. It's 8:30 on the 1st. Happy April. Are the markets up for some April Fool shenanigans? Let's find out. I'm going to get logged in. If you're out there typing a wire, yes. If you can hear my voice and see the risk disclaimer, because that's what we're going to start with. All right. We understand risk in trading. Please don't always use trade capital only. Do not trade with money you cannot afford to lose. Whether you're trading stocks, options, futures, forex, cryptos, you know the deal. Herbert in the house. Strider's here. Peter, good morning. Susan, good morning. What's happening? Wayne, Charles, Catherine, nice to see everybody. David, good morning. Jason, good morning. Here we go. Let's get to the charts. Jump into the news really quickly. We had non-farm payrolls this morning for the U.S., and it is official today. What are the numbers coming in at? Take a look at financialjuice.com and give a little refresh to this. I want to take a look at the April, May, June for the S&P 500 for the last, I think it's 50 years is what the screenshot shows. Yeah, about 50 years. We'll take a look at that in just a second. So, numbers, anything. Non-farm. Really? 831? No real-time news? What up with that? Unemployment rate seasonally adjusted, non-farm payroll seasonally adjusted. Did it come in like super low? No. It's April 1st. Let's see. Let me refresh the calendar. Anybody have numbers? Give me some numbers. Not negative. 431. So it missed by about 61,000. Average hourly earnings came in as expected, 0.4%. There was a miss on the job side, but a slight gain in the unemployment rate. But that being said, I know that the jobless claims were higher yesterday. So unemployment claims forecast of 195 came in 202. And today, forecast 492 came in 431. But we had a positive revision from 678 to 750. So that is around a 70K increase. And we missed the actual number today by 61,000. So it could be a bit of a mix, maybe a bit of a non-event. I wanted to start out with showing everyone the quarterly performance for the Barclay Hedge Fund Index. This shows around 3,000 funds. 3136 is the number, so 3,136 hedge funds around the country, or world rather. And January, February, March performance all in the red, down 3.83%. Now what's interesting is that is slightly better than the overall market. The S&P with yesterday's sell-off was down. Year to date, I believe it's down about 4 to 5%. Okay, so we started out here. We had our kind of worst case situation with the Russia-Ukraine invasion. That got us down to about 14.5%, respectively, about 14 to 20% between the S&P, the Dow, and the NASDAQ. So, the NASDAQ crossed into that bear market territory once we cross over 20%. We've had a pretty miraculous comeback. We're still not at highs yet. There's a lot of volatility to navigate. Yesterday's close is a little alarming. We are pre-market higher, so futures is rebounding. And this is what I want to transfer into. So red candle last 48 hours. Talk about the S&P 500 month over month. Now this is January, February, March, April, May, June. So I'm going to square this out. Give me 1 second here. Where is my drawing tool? Somewhere in here it disappeared. Give me a sec. All right. So what we're going to look at here, I'll zoom in and we'll go April, May, June, and just take a look at the last 50 years and see, do we finish positive for that quarter or not? That's what I'm interested in reviewing. Because according to the Barclay Hedge Fund Index, which again is right here, I'm expecting April, May, June to perform reasonably well, right? Even though, 2018 was a bad year. 2019-20, not so bad. It could have been bad. 2020, we know. But thanks to $6 trillion of stimulus and everything else. But April, May, June, traditionally a pre-summer push, a strong rally into the summer months. There's that saying, the old adage, sell in May, go away. So a lot of April, May, risk appetite, and then summer break. So over the last even 4 years, 2021 back to 2018, finished very positive for that quarter. So April, May, June, 2 of the 3 months positive. For 2018, 2019, 2 out of the 3 months positive. 2020, 2021, all 3 months positive. So again, I'm not saying that's going to happen. I'm saying that it could happen. I'm saying that probability-wise, if we go back to this chart and look at even more history, see if I can zoom in. Everybody see that okay? April, May, June. I'm going to box this in. April, May, June. Okay. So my Barclay Hedge Fund Index goes back to 2018. This is 2017. So 2017, all three positive months. 2016, all three positive months. 2015, 2 out of the 3. 2014, all three, 2 out of the 3. Right? It's a little this little stint from 2010 to 12 where 2 of the 3 were negative. But we also knew that we were coming off of a financial crisis. 2008-9 had a bottom, had a rough quarter there. Wow, 2011, I didn't realize how nasty that summer was. May, June, July, August, September. Wow, that's a horrible summer. All single digits, but I'd be curious to see what 2011 was net. I can look at S&P historical returns, but anyway, all I'm looking at is for the most part, I mean, we see some red, but we see a lot of green for Q2. April, May, June, right? And if most of that momentum is established in April and May, and June is more of a drift because there's a little bit less volume during summer trading months, I'm fairly bullish going into this quarter, especially after having a negative quarter, especially having one of the worst quarters in the last 2 years. Okay. And it could have been way worse. I mean, if you think about this, we could have been way worse going into the end of this quarter. But post FOMC, the market rallied really hard. And, it's in a way, it's kind of nice to see that there was a pullback because if there's any more buying interest, maybe there is interest to buy. If we have a low, we have a high, we have some dips in here that the market could buy. We still have this rally potentially targeting these highs, and we'll see what this market's made of. I had mentioned before, like if we get back up to these highs, pretty interested in looking for short positions. Timing wise, I mean, if it's May, I'm probably not going to short the market. If it's June, going into June, July, August, into September, if I give myself enough timing on that, I might take some stabs at the market and short it into the end of September, October, something along those lines. But we'll talk about that in trading rooms, and I'll see what trades we have lined up. But right now, I'm thinking we have a pretty strong quarter ahead, and I'm trying to remain pretty optimistic. If we see additional, peace talks in Russia, Ukraine, NATO, whatever, then that could be good for a little bit more risk appetite. Money's got to go somewhere. One thing, okay, so this just happened last night. My wife and I were at a little function, and it was a little fundraiser for a real estate group that we've worked with and we've become pretty good friends with. And they they are telling me how many clients they have that are being outbid by everybody by like 6 figures in single family home units. Like this is, I mean, I live in the Midwest. I live in Michigan. This is insane. I don't know where this, top 1% money is coming from, or this top 5% money, or just people are that desperate that they're putting everything they can into buying a house, but willing to pay $100,000 over asking just to get your foot in the door. Like, so, I mean, that makes me think that, I mean, I know that this isn't like the hottest market in the country, but it does pretty well. Still, real estate is probably one of the best assets I see performing this year. And speculatively, I'd say crypto could be one of the other ones. So let's dive in a little bit further. Let me take a look at the currency strength chart and see if anything stands out with the non-farm today. So we have stronger Aussie. The yen got hit pretty hard this morning, so we were getting hit hard during the Asia session. Again, retested those lows during the London session, and we're back to those lows again to wrap up the week. Remember, the month just ended, the quarter just ended. A bit of a reset button was hit on some of those JPY pairs, so I will take a look. I'm still short. I did not have a chart alarm go off on that weekly pivot for the dollar yen. So we're trading at 122.77. It's just shy of that 121.20 weekly pivot. So I do want to ask if anybody is following my newsletter, the Pulver Report newsletter. I did take a sell trade at 123.35. We came within about 10 pips of that weekly pivot. So I'm hoping that you close that trade out for about 200 pips. Okay? That would have been a nice way to protect it. Granted, it didn't hit it, but like I said, if it goes down towards that weekly pivot, it's good enough. The trade never gave you any problems. And at this stage, if that was your trade, move it to break even. Don't let this come back and stop you out at plus nothing. Move it to plus 20, 25, whatever. Move it to plus 35. If it jumps up and takes you out at plus 35, then so be it. But you had a chance to grab about 200 pips of profit. So that should have been a pretty easy trade. I'm still short on the dollar yen. I'll stay in this position. I'm curious if this is a 1, 2, 3 wave move. We still have a fresh monthly pivot out there up for grabs that just printed. So we have our weekly pivot that is still available. We have a new monthly pivot. I, for one, would like to see a failure or a lower high and then see this thing proceed lower, find some moving average balance, as well as some pivot levels. So anyway, that's that. Let's go dollar index. So any big jumps on the currency strength chart? Nope. Weaker yen. It is falling again. That's just updated. So weaker yen, stronger Aussie, stronger New Zealand. The dollar's coming out a little bit, but still softer. So if anybody is long with me on looking to get long an Aussie dollar, it's retesting these highs. Go back to the daily chart here. New Zealand dollar, I'm still holding some long positions, trying to get back up to this yearly pivot, hopefully higher towards 7,200. But I'm gonna hang tight and I keep holding the New Zealand dollar long. Dollar index still in no man's land with chart alarm set above and below. I just don't know what it's going to take. And again, I don't really care. We talked about this yesterday in Flex. I mean, is dollar index going to make this break or make this break? I really don't care, right? I think, Denise, you were asking me if I was bullish or bearish on the dollar going into the summer, and my answer is neither. I just want to see where the heck this index wants to go so I can make a decision. So for right now, I'm not really choosing to trade the dollar because I don't think that these setups are really going to follow through. So the only one that I'm in euro dollar long, and that's more of a position trade. I'm in dollar yen short, that's a position trade. I'm in dollar Swiss long, that's a position trade. But I'm looking to, see some clarity where do I have a, basket trade that I can follow along with some bigger flows. Okay. All right. Let's see when that ends, and it will end. It will be ugly. I know, but you know what? I've been hearing the same song and dance for the last 4 or 5 years. And I'm not saying it's not going to happen. Believe me. I mean, it is get in while the getting's good. It is take advantage of the rationality. I am cautiously bullish till the end of time. Look, I know that there's going to be a reckoning. I know there's going to be I don't know, the cleansing of the century, the worst, whatever. I mean, you can sit here and be a doomsday prepper in the stock market, but you know what? Irrationality is driving the market up. So I'd rather not fight it. What I'm not going to do is spend months and months and months fighting what could be still a bull market. Because right now it's like, how hard is it as an investor to see your money work for you? Can't park it in bonds. There's no safe haven in bonds. You're compounding losses because of inflation right now. You can't park it in a bank because there's no yield. Even parking it in fixed income like a 10-year government bond, it yields 2%. Okay, so your inflation is 7.5 to 10%. You're compounding losses. I mean, so you're going to be in real estate. You're forced to be in equities. You're going to be in crypto if you want to add that exposure. And I'm not joking. Like this, I know it's speculation. I know we had some dips and pullbacks, but we have a monthly pivot here. But I'm curious if Bitcoin is going to be one of the best performing assets this year. And again, it's not going to be like parabolic 1,000% gains, but even if we, started to base here around $40,000 and we finish the year at 69 to 70. I mean, if you have an asset class that is producing a 60 to 70% rally, nothing else is going to touch that. So, I mean, that's kind of what I'm looking at. It's like money's trying to go somewhere to get gains. And I don't know. I think and what is clearly obvious is there's a lot of money out there. The M2 supply is as high as it's ever been. Personal household wealth is as high as it's ever been. And I know that whatever the Fed is navigating, whatever the global central banks are navigating, it's not easy. Whatever they're navigating government-wise with oil, with energy, with inflation, I know it's not easy. I know it could all end badly, but I can't fixate on sentiment. It's like if things are bullish, I trade the right sectors. I try to put myself in front of opportunities and momentum and get paid. It's like I don't know what the market needs to do, has to do, but I'm going to try to be on the right side of it. My job is to be profitable. So I don't care how it happens. And I don't care what I have to trade. So anyway, all good. So crypto's had a little bit of a decline the last couple of days, but keep in mind that we did have a massive rally over the FOMC recovery. So that post FOMC rate decision the last 3-4 weeks, about 3 weeks actually, it was the 16th of March. So the last 3 weeks, nice recovery, 20-some% gains. We had huge flows into the crypto market cap as well. So with those rallies in Ethereum, rallies in Bitcoin, rallies across the board. We had some falling wedge patterns that were breaking out on Litecoin, Solana, Cardano, getting on the right-hand side of the trend line. Link was another one. So some of these cryptos that I'm in doing pretty well and seeing that perhaps we're breaking the structure and showing some bullish momentum as ahead. Okay. Strider, give me some more information on that. Wife's a mortgage broker. There's beginning to see signs of change in what way? Are people feeling the pinch? Are they feeling like they're getting priced out of the market? Are people? I saw that the borrowing rates officially were up to like 4.6% for the average 30-year now, which is it's getting up there. I mean, I told my wife if we closed on the house that we have right now, look at that, 30-year fixed rate at 4.78. That's getting up there. So, again, some could argue like that's still way behind and that's super cheap. But look, if you close your house at 3%, sub 3%, you refinance at sub 3%, you are way better off than somebody that's going in right now. Looking at prices that have already appreciated. We had 16 to 20% appreciation across the board in real estate last year. The average home price was way up. Certain markets were obnoxiously higher than they probably should be, but it was definitely a seller's market. I mean, we had situations here where you're getting guaranteed appraisals on shortfalls. You're getting these great terms of occupancy. And I mean, we literally built a brand new house and we're able to stay in our old house until the day we moved into this new house. Like terms were totally on us. It was great. And it was cheaper to actually build new than it was to find a fixer-upper that was already expensive. So, but I'm curious, someone that's in the business, what are they experiencing? What I saw last night was great realtor group that has been super busy and super successful is starting to see that their own clients are getting priced out of the houses that they want, but also the inventory remains super, super low. So, yeah, I mean, like the real estate market is still doing very well. I think the hardest thing right now would be how low inventory is and how much more people are willing to pay over asking. And that's kind of a double whammy. It's like it's hard to justify 50K over asking, 100K over asking. I mean, that's insane. So it's probably stretching that budget where maybe people are feeling like they can't afford to be in that house because over asking is so much. And then you're talking about interest rates going up as well. It's like I said, it's kind of a double whammy, right? All the banks are not going with the high appraisals. Lenders beginning to tighten. You are correct. Get the land and build is a better option. Yep. So that's what we did. We had the opportunity to do that, and that made it nice. So anyway, good stuff. Thanks for sharing. All right, we're good on crypto. Let's go to oil. Had a chart alarm last night. Oil's back below $100. We're trading at 99.42. The big story yesterday was 100 million barrels. Is that correct? We have Biden unleashes oil reserves. Let me see what it's in here in Morning Brew. Let's see here. Biden unleashes the reserves. Biden administration will release 1 million barrels of oil every day for the next 6 months, not because it enjoys the smell, but also to flood the market with supply and tamp down spiking gas prices. Now, I had a really good conversation with a friend of mine. I guess I can officially say hedge fund manager now. And we were talking about this whole situation with oil, with energy. Part of me thinks that, okay, the Fed's agenda is to raise rates to start to tame inflation. The Biden administration agenda is to tackle inflation as well. That's one of the hottest topics right now in the U.S. with a midterm election coming up. And how are they doing it? They're trying to fix gas prices. Here's a ton of supply. And my concern is that this looks good now, like the optics are good for the next 6 months. It's interesting how April, May, June, July, August, September, and then you're talking October, November, midterm elections. Peculiar timing. And in addition to that, I also think that if you give the market all these reserves, you might have this like weird boycott of companies that don't want to produce oil at declining prices. So in a weird way, and I'll make this little forecast, I think that this is still not going to keep oil prices lower. I think this is a short-term fix. I think this is to stabilize the rally from 65 to 130. Essentially, oil doubled over the last like 6 months. But I think this is a short-term fix because all of a sudden, if you give the market all the supply and then perhaps aren't producing more to get after 6 months, right? Like 7, 8, 9 months in, it's like, what if we're back into this pinch of we don't have any oil? And then there's a there's a supply shortage, and then the prices start to go back up again. I just wouldn't be surprised if oil and energy continue to go up, because if the world is going to switch over to green energy, this is the narrative I'm sticking with right now. To me, it makes sense, and it's pretty wild. But if we're going to force adoption in green technology and force adoption in alternative energy sources, we almost have to make it so unaffordable that you have no other choice but to innovate. Because I think right now it's like if oil is $40, $50 a gallon, why would you spend all the money on the infrastructure to redo the entire ecosystem? Because you should, right? Because of social awareness and government responsibility and the Paris Climate Accord and all these promises that have been made, but doesn't mean it's going to happen. Paris Climate Accord is 8 years out. 20 some years out. I mean, 2030, 2040, 2050. Nobody's thinking that far ahead. I don't think, at least. You know, most countries are running on election cycles. In the U.S., we run on 2 to 4 year cycles. So the only bipartisan agreement you see here in the U.S. is defense. I don't think we're gonna have a lot of energy related bipartisan, unless it's like, oh, let's fix this little short-term crisis and tamp down oil prices. So anyway, we'll see. But I think releasing the reserves is, like I said, I think the optics are fine to tame the prices right now, but we're still not breaking major lows yet. I still think oil is still willing to stabilize and have all these past resistance levels still hold, but we'll watch price as always. All right, let's take a look. Gold and silver. Gold and silver still stuck a little bit. I was talking about this yesterday in the flex room. If this is a corrective move off these multi-year highs, high to low, lower high to lower low. So we have all of this beautiful past resistance over here around 1830. We have a projected swing down to around 1800. So this area is where I'm willing to buy some more gold, possibly down here at 1676. And those would be, my two levels, my two big levels to be long gold and hold. And if I'm holding it back up to highs again, cool. That would be, what's the appreciation on that? So let's say the gold came all the way back down to this 1700 level. You're looking at about a 24% gain to the upside. Interesting. Okay, and again, we may not see gold really swing that far unless the dollar has something to do with it. If the dollar index breaks and goes north, okay, I think that gold drops. I think that oil can drop. I think silver can drop. I think commodities in general can drop. But that is still going to be dependent on, I think the dollar has to do something positive. If the dollar drops, then flip all these the other way, and you're talking oil's back up, commodities back up, gold's back up, silver's back up, anything that's a good play against the dollar's back up. So even though the dollar's been really boring, I do expect there to be some type of reaction and breakout coming hopefully in the next, couple of weeks. April, May are typically trending seasons in the markets, in stocks and Forex, most likely in cryptos as well. Okay, here is silver. Silver is at 24.56. Still looking to see if we have a reaction here at the backside of the trend line. It may come back down in base of the lows around $22.50 to $22. I'm still long silver. I'm still going to hang on to it. Okay, I like long on SLV. I like long on, XAG, all the way up towards $29 to $30. Ethereum, 3305. Interesting. We just had, let me see if Bitcoin's showing a bullish candle for today too. So that's a nice little wick to the south. I do want to check here though. If I'm not mistaken, we have a nice little pivot cluster. So we have a weekly and monthly pivot cluster right here, as well as a weekly from last week. But from this little decline, perhaps this is a little rally today and it still declines over the weekend. Remember, cryptos trade 24/7. Maybe it finds some nice support in here at this pivot cluster, and we'll see if there is some bullishness ahead over the next couple of months. So, I did talk about this the last couple of weeks in Flex. I'm just not super convinced on the overall structure of just straight up bullishness on cryptos. I think that there could be some structure like this. Okay, where we had this nice little rally post FOMC, but if I'm connecting the highs here, this high to this high, and really all I did was I used the lows and then did a parallel line. You can see that right here. So take a look. If I just take this line and connect the lows like so, and then you just copy that same angle and paste it on that high, guess what? There's your resistance. So, we may still hit some resistance ahead, and this might be a bullish channel, right? But we might see some volatility and some ups and downs over the next couple of months, or perhaps it goes a little bit more parabolic and breaks the structure, breaks out here, little pause and pullback, and then starts to run. I don't know. We'll have to wait and see. So I'm looking at cryptos and the charts and technicals quite a few different ways and trying to figure out what is the best plan moving forward. Okay. Daniel says Shiba has a nice cup and handle. Oops, let me go Shiba Inu. Well, I mean, I see a little bit more than that. I mean, if this is the low, this is the high. I mean, this could be a crown pattern with this broken low, or I'm sorry, this broken trend line. So we have a left tip, center tip. I could see this still holding, like this could all be forming that right tip, and then you have another crown right over here. Another left tip, another center tip. I look for a right tip and follow along with a bigger swing. So we could be looking at some some symmetry right here. Low to high symmetry right there. And you want to copy and paste that. And you can project that move off of this low right there. And if we have another swing, you can copy and paste it off of a higher low. So perhaps we're getting into this type of environment where we have a low to high, higher low to higher high, higher low to higher high, and we end up coming back to this yearly pivot, right? Maybe it does so in a fashion like this, where this is a channel like so. And it moves up, moves down, finds a way to move up, move down, find a way to move up, hit some of those symmetry levels. Okay. So anyway, we'll watch. But I see crown patterns more so than cup and handles. All right. Any other requests? Any charts you'd like me to take a look at? I'm interested in some of these yen crosses. I know the Aussie's up today. So a couple things I'm watching on Aussie yen. I do have a pending sell here at the top. Okay, I'm looking to see if I can sell this high. If this is a 1, 2, 3, I'm looking to see if we still have a move that comes down to weekly pivot and monthly pivot cluster. It might take another week or two, but I want to see if that ends up transforming over the next couple of weeks. We also have all of these beautiful inefficiencies and pockets to trade back to, in addition to past resistance. But there's going to have to be some type of rebalancing on these yen crosses. Overnight on the currency strength chart, the euro and the Swiss are about the same. I've been watching a lot of drama on the euro Swiss where it's like gets me all excited and then it gets a reset. So we had some nice profits coming off of parity. I'm looking to see if the euro Swiss will continue to head higher. I did have some resets on the dollar Swiss. So dollar Swiss, I've been buying in on some of this decline. I've got levels all the way up to 9,400, but I bought all the way back in down towards 9,200. So I still have a monthly pivot. I'm looking to see, does this market, make, we have lows, we have higher lows. If the dollar Swiss continues to make these higher lows, then maybe we're starting to form something like that. And we break some new highs and we protect some profits, and I continue just to buy, pending orders. I mean, I'm buying dips, I'm buying breakouts, and I'm trying to stay long on dollar Swiss. Also, the Swiss National Bank, it was this week, I believe, they kept the rate the same at negative 0.75. So one thing that's interesting is their official borrowing rate or their official cash rate is negative territory. But if you look at their 10-year bond, it's trading at over half of 1%. So that's quite the differential right there. The Swiss National Bank is negative 0.75, but there's been this flow into Swiss government bonds paying 0.6%. Again, that's still losing to inflation. But from a technical side, also look at how aggressive this has rallied, and I think that this is also due for a correction. So if this is wave 1, 2, 3, 4, 5, at the very least, we should see a correction here coming on this Swiss 10-year. If that's the case, that should help soften the Swiss up a little bit. I'm wondering what this appreciation is to start out this year. We started out right around here. We're up. That's insane. Almost 1,000% increase in the 10-year government bonds for Switzerland. It's crazy. And that is what's like so disconnected right now is, you have still a very resilient and strong Swiss franc, and you've seen just a blowout of weakness on the Japanese yen. And those are traditionally the two like most obvious safe haven currencies, and they're on complete opposite ends of the strength and weakness spectrum. So that's difficult. Like that's a hard decision to make because if we have safe haven, does it flow safe haven and the Swiss get stronger still while the yen rebalances, or does one step in and I don't know. We've seen intervention on the part of both central banks, so that's what's a little confusing and perplexing right now. All right, Graham, Aussie, New Zealand, sure, take a look at that one. So Aussie, New Zealand at 108.34. I have a pending order with the flex room at the highs. We're going to look at a breakout around 108.90. That breakout, if we get filled and activated, I am going after 110. My stop loss is going to be right over here below this recent low at 107.50. So if I'm right, I'm going to go with the breakout 110 or higher. I think there's room up to 113, 114 if you look back on this chart. This could be a long time correction in the works. From this low to high swing, we have levels back to 2020 around 110.50. We have levels back to 2018 and 2017 and 2015, all the way back here towards 111 and 112, almost 113. And then we have these highs where we had, the kind of volatility breaches around 114. So if this is going to follow in the path of this low to this high, I just wonder if it's going to take a little bit more time. But if this is ready, I can see that going to 113. Okay. So, and again, if I'm wrong, and I told traders this with the setup, if we get stopped out on this trade, okay, so let's say that the breakout is a fake out, right? Where we either get filled and this thing reverses back the other way, well, then I'm looking for a topping pattern. If it fills us and it comes back down, we decide to take a loss. If it closes back below these areas, then sure, this could be a topping pattern, and we look to sell this, and this just holds channel resistance. But if I get stopped out, then I'm probably going to reverse my position and be slightly bigger on the trade size to make up for it. But I want to see if we get a breakout to the north. I think that the Aussie versus the dollar, the New Zealand versus the dollar, the CAD versus the dollar, I think those commodity pairs can play pretty well. Okay, pound US dollar, sure. Cool, nice to see you. How you been? 1.3111 on the pound US dollar. We're stuck between a couple of pivot levels. So I had mentioned before, the level I'm really watching is around 2850. It's right in here. Past resistance over here, that's 2800. We've got some clusters right in here around 2850. So, we're sitting at some channel support. Okay, the dollar index isn't really moving much, and therefore the pound dollar, euro dollar, some dollar related pairs aren't moving a lot either. So if I'm looking to get long, I've told traders this. I mean, it's kind of tempting to take a trade now and put a stop loss below and see if it plays the channel properly. But if it just ends up leaking a little bit lower, if it leaks a little bit lower, I'm interested in this past resistance becoming support and then looking for a channel play back up. Okay. I do think in the bigger picture, I mean, we have some harmonic patterns that can go down as far as like 2,500, but coming off of this, I mean, this would be pretty nuts if you have all of this structure over here that ends up getting revisited. So if this channel just keeps playing out, playing out, playing out, playing out, playing out, eventually this will break and go back up. Okay. I don't see the pound dollar going too much lower than like 2250 or even 1.20. From there, like I'm super interested in buying this thing like long term to hold pound dollar long. But this could be, again, a very cooperative, but, challenging environment to trade if it's just channel oriented. So I still think it's a good instrument to be trading range bound currencies like this, where, you have something that's buying low, taking profit, selling high, taking profit. I've got a couple robots that do that for me. So, like I said, if I'm buying it, it's going to be support around 2850 or 2800. But play the channel. Okay. Apple, what about Apple? Buy it. Apple's at 173. I mean, I'll buy dips and corrections on Apple all day. I'm not super excited about buying breakouts on Apple. But again, what is something that we should take note of is look at Apple, okay, and compare this to the Qs or compare this to the S&P 500. So take a look at this chart on the daily and let's compare this to the SPY. Okay, and let's compare this to the Qs. Because what you'll notice is a pretty strong correlation to what price has just been doing. Yes? So we had our top at the year, we had our top at the year. We had our bottom of the year so far, we had our bottom of the year so far. We've had a rally the last 3 weeks. We've had a rally the last 3 weeks. It's almost scary how this has become a safe haven type instrument. If you want to see when the stock market's going to sell off, look and see if Apple's dropping. Look and see if Microsoft is dropping. Look to see if Amazon is dropping. Facebook is kind of on its own island now. The market really hit on Facebook hard and kind of hated on Facebook hard. It's got massive gaps. I did a trade this week in Equities on Demand. We took a credit spread on Facebook and on Netflix going into like this Q2 push, and hopefully we'll see some recovery. But when I look at Apple, it's like Apple has become, a large concentrated barometer of the overall stock market. So if Apple breaks highs, I wouldn't be surprised if the SPYs, the SPY and the Qs are coming back to retest these highs. So even pre-market, we are, let me get rid of those comparisons here. So take these down. I just want to see pre-market, are we higher or lower? So take out that, take out that. All right, so pre-market we're down by about 80 cents. No, sorry, $1.20. About $1.20. So pre-market's down in Apple. I don't know. I mean, I just own Apple. I've owned it over here since they did the split. I bought some around 120, bought some more around 140. I don't think I bought any more over here on that dip because I was waiting to see if I had a straddle in here that we did take some profit on in the decline. But I'm looking to see, I could justify, buying some breakouts and still kind of dollar cost averaging in Apple. But I'm a little cautiously bullish on this stuff, And honestly, I'm more excited about the potential, Google 20-to-1 split or 20-for-1 split coming this summer, and we'll see where the levels are at. I did buy some levels down here at 25.60 and 25 or 25.69, 25.63, and Google's doing really well. Pre-market, Google's actually higher by it's only $10, but it's higher. So, I mean, that's not a bad thing. You also have a 20-for-1 split in Amazon. Amazon's rallied hard. I bought Amazon at $2,800, and pre-market it's up higher. So that's a good thing. Tesla, they again announced another 5-for-1 split, and Tesla rallied like crazy. Kathy Wood, ARK Investments had this 3x recovery versus the S&P. I attribute a lot of that to the performance of Tesla. I mean, there's a lot of stocks that ARK is in that are crap right now. I mean, for example, they dropped Palantir, PLTR, which by the way, I did close out for profit on this. Palantir's up to 13.73. I think we did a repair on this one up to 12.50 or $13 and lost the stock for a couple dollars profit. I can show you that right here. My break even, let me get that spreadsheet updated, PLTR. So I drove the cost down to $10.68 and then lost the stock at, I think it was either $12.50. I'll check here. $12 call, and this was a $12.50 call. So I lost it at $12.50, and I had a couple hundred shares. So it was a nice little turn. What was it? 1068. 1068 lost it at 1250. 200 shares. So in a couple weeks, I made $364 on Palantir. I mean, I'll take it. And it was super beat up. We had a nice little recovery. By the time we got out of Palantir, I was also out of Twitter. This week is going to be interesting if I can get out of Uber. Uber's trading at 35.68. I rolled the call out to next week to get a little bit more premium. I rolled this and got 40 cents credit. I kept the same strike price at $34. So if Uber stays above $34 next week, I'll make an extra 40 cents a share. And hopefully it stays there. Some stocks, actually, I want to switch over to stocks here in a second if we're good. Daniel's up. Short euro dollar, set a target at 110. Okay, let me take a look at that for you. Euro dollar is at 110.53. Yeah, I mean it sounds like you're kind of aggressively going after it, yeah. I mean, I can see this happening. So we have all of this past support over here. I can see the euro dollar, making its way here, still vulnerable to the downside. But I'm interested, does it put in a bottom here at 108? Do we have to come back down to 105 to build a low? I'm not sure yet. Is the dollar going to get hit harder where the dollar drops? If so, then the euro dollar can make this recovery. We're starting to have this conversation back to 115, 116. I don't know. I mean, the dollar index is going to have to make a move, and we'll have to make the trades according to that. So I think if dollar drops, then euro dollar performs well, gets back to these highs, pivot levels, and what we want to trade back to. But I'm like I said, I'm just a little skeptical because this has worked its way down low enough and broken enough structure that this could just be this tight little correction, and then it's just easier to be like, oh, there you go again, and it drops all the way down here, then sets a low, and then we're talking about a bigger reversal pattern coming later. So again, I'll evolve my analysis and we'll continue to watch this one as it unfolds. But good stuff. If you're in profit on that one, move a stop loss and take some profit. If it's a trade that you didn't really have any intentions of holding long, grab 50 pips of those 80 pips and let it, put a trailing stop loss in and see if it makes you more money. Okay. Peter says Home Depot could break sharply down after a significant drop already. Home Depot, did they miss on earnings or something? So 299. I mean, sure, they could drop. They could drop pretty hard. There's plenty of room. Look, there's a lot of stocks that could drop, right? I mean, we're seeing a very strong disconnect in the stock market right now. Yesterday, I mean, we still have 21 minutes before Wall Street opens. If you look at the heat map, it was not pretty. So it doesn't. Okay, so it's. I didn't get a screenshot from yesterday. Fudge. Okay, so that's. Let me go to 1 day performance. Does it show yesterday? I don't know. Let's go. I suppose let's go this week. It's probably still mixed for this week. All right, never mind. I was hoping to get the screenshot from yesterday, but it should have been red. Most of it would have been red yesterday. I can get the recap from StockTwits. Does a pretty good job of recapping. And they were talking about the Strategic Petroleum Reserve. Okay, so here's the heat map right here. That's what the market did yesterday. So it was not a good day, right? Every sector closed lower yesterday. Financials flopped 2.29, consumer discretion dove 1.92, communications crumbled. So, high ones or 2+% across the board in sectors. It was a pretty ugly day. I got to All right, I'm gonna have a little sidebar and a joke. If anybody's feeling the need to dress up like Bane for Halloween, you can get the new Dyson headphones with built-in air purifier. I just thought that was funny. Dyson makes great vacuums, but that does not look like a cool product for me to put on my face. Anyway, can I do QuantumScape QS? Sure, we'll take a look at that. So HD, sure. I mean, what would I do in Home Depot? I'm curious to see, do they have earnings? Maybe they just did. Maybe they missed. Maybe earnings coming up in April, May as we roll into another earnings season. We have earnings May 24th. So they have been on the decline recently. Look, just look left on your charts. I mean, this is a decent spot where we had some consolidation on Home Depot. We could have that be a bouncing point. The market's already discounted it slightly. A lot of what I'm looking at in a lot of these charts that have just had these massive rallies post 2020 is I'm kind of looking at this overall rebalancing from COVID's low, right? So you take this low to high, all right? And I'm just dragging this big Fibonacci all the way up. And I know that's not the best way to do it, but if this is a low to high, higher low to higher high, higher low to higher high, guess what? A lot of times after a fifth wave move, we're looking at an A, B, C correction. Okay. And there are a lot of stocks that I think are in that C where we've had a decline, we had a little bit of a rally, and I think now we can see more decline. I think that decline is more likely going to happen with tech stocks again. I think that tech still remains toxic because growth is threatened by rising interest rates. I think that mergers and acquisitions are maybe the safety net right now. I think that if you're beat up and you're super cheap, you could be a target for a bigger company to scoop you up. Also, you're seeing a lot of buybacks right now. You're seeing either buybacks and shares or splits to add those shares and add that liquidity and get more investors in and give places, give money a place to go. I think that's a short-term solution. I mean, Amazon's a great company. I won't deny that. 20-to-1 split, you should be excited about that. Google's a great company. You should be excited about that. But if you have this, if you have consumer spending that's going to get hit and start to shrink, that will go into corporate profits. Right now, we're looking at all this wealth, all these corporate profits at all-time highs, but true Q1 performance, not carried over from last year. I'm talking true Q1 performance is going to be interesting for this next earnings season as we go into, April, May, and June. Okay. So anyway, Home Depot, like I said, I would just wait and see how it plays out. I think it's interesting to be at this point at $300, but truthfully, I'd love to see it fall more. And not because I wish the company ill, but I mean it's a 28% correction. But if I'm even interested in starting to trade this, if there is a chance that this comes back down to, let's say this pre-COVID high, and where we had a nice bounce here around 250, I would buy Home Depot all day between 300 essentially, which is now, and then 250. So that'd be kind of like one area, second area, and then if we came anywhere near these COVID levels, then third area, and that would be long term. Don't touch it. Let it appreciate. I mean, the paradigm shift from city exits to building homes and subdivisions, and it's ridiculous. Home Depot and Lowe's, I mean, they should be doing pretty well from that. But if there's also things get more expensive, people stop adding house projects because they're freaking expensive. You put in a deck, you put in a fireplace, you put in a patio, you do some renovations, even if you do it yourself. Materials are expensive. You contract somebody to do it. Labor's expensive you know so it's a lot of money. I mean, I think somebody at Home Depot was telling me that the average customer, if they can keep customers happy, the average customer over like a 10-year period spends like 100 grand at Home Depot and Lowe's. you know that's a client that you want. So anyway, but stuff's expensive and unaffordable, you're not going to buy it. All right, so that's my thought on Home Depot, and it's expensive, so I'd like to get a little discount, or you just trade options. Let's take a look at QS, QuantumScape. QuantumScape, 20 bucks. Electrical products. What do they do? Energy storage solutions, development of solid state lithium. Ooh, now I'm interested. Lithium, raw materials, probably some battery plays, electric vehicle stuff. Yes. You know what? I'm going to write QS down for maybe a little trade this morning on equities on demand. We'll start class at 10. Let's take a look at old QuantumScape. Here's a little snowflake analysis. So thanks for bringing that up. So financially healthy. Doesn't have a lot of revenue right now. It's certainly in the growth arena. It's obviously had a good recovery recently, like off. I mean, $13 up to $20. That's a nice recovery. Um, I'm gonna do some more digging this morning. So we have commercialization solid state lithium metal batteries for electric vehicles and other applications. Is it all about electric vehicles? Do they have a monopoly on this, or is it like they're just one of the many suppliers, many parts of the electric vehicle boom that's still, 1, 2, 5 years away? So I think it's a good potential play. But would I expect to see, tons of profit on it like right now? I don't know, not necessarily. But I think the beautiful thing is we could start playing this now at 20 bucks. Over the coming weeks, we could drill our cost down to maybe $16, $17. I would feel totally fine owning this thing in the low teens and have this be a $30 to $40 stock. So I'm gonna throw out I'm gonna throw this over to my buddy and see if he wants to take a look at it with me this morning. And we'll come back and we'll discuss that one today. Because I'm interested. And it doesn't hurt if I want to take a chance and throw in a credit spread or so. And if it pays me, 50 cents, cool. I make some money on the upside. If it goes against me, hopefully I go out with earnings. Let's see what we have. If QS has earnings over the next month or so, May 18th. So I could do a credit spread around May 20th expiration. And if it goes against me with earnings, I can lower my cost and try to follow it tick for tick with that decline. If it's a rally, then maybe it's worth actually buying some shares in a smaller position, at least like a chunk of 100 shares, and then work with some covered calls and try to get some premium. So 250 spreads and monthly only, Gary. Ugh. Well, Gary, you must know what I'm looking for. Look, 250 spreads aren't the end of the world. Monthly options aren't bad, but what that does tell me is that it's just less workability. You're not going to collect a bunch of premium, lower the cost week to week. Um, but again, if the terms are right, if it's a 250 spread and I can collect $1.25, it's fine. I mean, if I did a 20 by 1750 and I collected $1.25, my ownership price would be 18.75. That's my break even. So that'd be fine. If it goes up, I'll make a decent premium. If it goes against me and dips below 1750, that's my insurance. I want to go out further and having monthly expirations. I mean, we could go 414, we could go 520. So we'll take a look at it this morning. Ticker 5 is that? Oh, hang on a sec. All right. So now you. All right. Let's just log in and see. QS. It's gonna log me out here. I'll get back in. All right, and then we'll start wrapping up. I know we have plenty of time before my 10 o'clock class. We started early today, so I'm just curious. Let's take a look at QuantumScape. If you have any other stocks or take a look at it, let me know. Susan's in at $14. Good. Good for you, Susan. You get logged in here. All right. And QS. So we're trading at $19.99. Wall Street's opening in 12 minutes. We do have weekly options. We do have 50-cent spreads. No, let me go to. So if I went out to next week. Oh, yeah, I could do a 20 by 1950. That's fine. I could do that. Collect 23 cents. I mean, the spreads are fairly tight. That's decent. Go out to next week. Could I collect a little bit more going out to monthly expiration? 24 cents. If I want to do something around that May, what was that May earnings? May earnings on the 18th. If I rolled out to the 20th, this might be wider spreads here. If I went out to the May 20th, I could do the 20 by 1750. So honestly, like this one isn't terrible. If I could collect $1.25, my only concern is that I don't really have any insurance on the long put until it gets below 1750. So I kind of like the idea of just kind of playing this week to week. And if I can drill the cost down, I can drill the cost down. So I could go out to next week and do the 20 by 1950, grab 23 cents. And, if it stays where it is, then I'll make some money above 20 bucks. If I don't, then I'll own it at $19.77, which is a little bit slightly lower than current price. So But like I said, my goal if I started to participate in this stock would be if I want to start taking some trades now, if it goes against me, I want to lower my cost. If it goes for me, I think there's room and there's open space for this thing to have some lows and we can start, forming a bit more of a bottom. But how much of a rally are we going to get? I mean, one good thing this has going for it is, it's an EV play, probably more so than it is a commodity play. And if I'm really going to be honest about this stock, EV play, I think are going to have their time. We saw some speculation, we saw some pumps on. I mean, Tesla's had a great run, obviously. We've traded, Arrival, Fisker, Workhorse. This is another one that's kind of came back from the dead. Workhorse is up to $4.99 off of lows at $2 and change. So some of these plays are okay, but some are also just trash. And I think it's going to be a saturated survival of the fittest type environment. And so, look, if every EV is going to have to use QuantumScape to use lithium batteries, that's awesome. But I also know that lithium batteries aren't going to be the end all be all of electric cars. There's talks of hydrogen technology, there's talks of other like cleaner and less like raw material heavy technology. So again, it's just a stock. It could be good. There's room to the upside, but the goal would be if you're going to take a chance, calculate the risk, know where you want to own it, know how to drill the cost down, and be willing to repair it. Okay. So, anywho, all right. Good stuff. Any other charts? I'm good for right now. I mean, we're a few minutes away from the market opening. Pre-market as we shifted. So pre-market SPY is up. Pre-market Dow is up. So we're actually starting to see futures rallying, which is nice. Pre-market Qs are up. Pre-market VIX. There's no pre-market VIX, but VIXY. Are we pre-market down? Down a little bit. SVXY. I have this one out to April, but we're at 55 and change, so I might lose the stock. I might see if the price is up here, I might try to roll this a little bit higher towards the end of the month. Polygon, so MATIC. Trading at $1.65. Let's go to the higher time frame. This is what I see on it, Susan, just a big range. I mean, if again, it's not super expensive for crypto. If it was, I mean, if I had nothing involved and I bought it for $1.65, area 1, if it came back down to this low at 70 cents, area 2, and all day profits for me would be 281. I would just look to see if I can get back to the highs. So it's like if you're wanting to participate in here or you're waiting for a better entry, I'd wait to see if 70 cents gets hit. Because it's right in the middle. And I just see a big range on this weekly chart or this daily weekly chart. Okay. All right. Sounds good. So we did a little dollar, we did oil, gold, silver, some cryptos, we did some forex, the usual, right? Nothing like a little Monday, Friday session. I will be back on Monday at 9 o'clock for our Pulver Report live session. On Friday next week, I probably will not have a session, but I'm going to try to post a video instead. I'm going to try. I'm going to be on a little vacation Wednesday, Thursday, Friday next week. So trading room times will be like video updates only or Telegram updates only. But still, I mean, we'll see what the market's doing. Of course, we'll keep eyes on things. It's nice to get out of Q1 and get into Q2. Let's see what the market's got. I think historically speaking, the market tends to perform pretty well. Tends to perform pretty well for Q2. And, evidence here, like most of Q2 for the last 50 years has been bullish. So again, maybe it's different this time. Maybe it's not. Right? I think money's trying to go to work. There's not a lot. I mean, think about it. With all the money that's out there in the world, it's trying to go somewhere. And I think the one spot that it's not going is it's not going in bonds. I think it's trying to, and I think that's where the big shift is coming. It's like, are bond buyers going to go just strictly into equities? Are they going to diversify into collectibles, real estate, maybe some crypto, equities, land? I mean, it might be like the old traditional tried and true assets, but they're going somewhere. Nobody's just putting money in a bank, right? Nobody's putting money in bonds when you're compounding losses with inflation this high. And like I said, the Fed's agenda, dump oil into the market to tamper down or stamp down the costs a little bit. I think that's just a nice little optic play going into the midterms. but I think the Fed is dialing the knob on interest rates because that's their only tool to tame inflation. And it's like that's the two-prong effort right now to be like, hey, we did it. We tamed inflation. Slash we paused it or we plateaued it versus it increasing. But I'm not buying it. So I still like energy. I still like financials. I still like materials. And we'll see how the Forex world evolves because there's a lot of moving parts in the central banks right now. The Swiss and the yen, it's a weird dichotomy. I don't love it. Both safe havens, but they're totally opposite ends of the spectrum. It's kind of driving me crazy. So anyway, equities on demand students, I'll see you at the top of the hour at 10 o'clock. I'm going to do some prep here. We've got a few to review. So Tilray, Chewy, Uber, Pfizer, Coinbase, Intel, Micron, ConAgra, United States Steel, Katera Energy, Halliburton, and then we'll take a look at QS a little bit deeper. Okay. All right. Sounds good, everybody. Happy Friday. Have a great weekend. Equities on demand students, see you at the top of the hour. And take care. Happy trading. Lots of profits. Bye.